Well, if Bitcoin will become the ultimate type of a form of the currency been adopted by human society, I can tell exactly what's going to happen as the worst scenario or the must scenario. We're all going to die. This is not a joke.
Right, hello and welcome to Camel Finance. I'm your boy, Camel. And we had J Powell speak yesterday at FOMC, of course. We also confirmed a pause in the Fed funds rate. So no surprises there, as that was pretty much priced in, wasn't it? But we have had some developments, some very interesting repricing. And I think there's scope for more repricing over the coming weeks. So the repricing we saw yesterday was we kind of took cuts off the table. Now, not completely, but we took them more off the table than they were going into FOMC versus a month ago when we were at just 11.5% probability that we would see another pause at March's meeting. But as it stands right now, we have taken the cuts off the table significantly more than a month ago, as you can see, in March. And so the question is, what are the implications of this? Well, as I've shown time and time again, right? Historically speaking, when we get the cuts show up, when we get the onset of a cutting cycle, a pivot from a pause to cuts, the stock market usually puts in a major top within 1 to 2 months of the onset of the cutting cycle. So if we're not getting any cuts in March, then there may well be scope to run this thing hotter into May. And then from May, we might have anywhere between 0 and 2 months from May before the actual top comes in for the stock market and for risk assets. So maybe there's more gas left in this goose, despite the cuts being taken off the table for March, or like I said, not completely off the table, but taken off the table more than going into the meeting. The inverse is true at May's meeting. Right, at May now, we have just a 5% probability, according to the CME, that we are going to remain paused in May. So in other words, we're not getting out of May without seeing some cuts. You can see if I use this compare tool, a week ago, we had just 10% probability. We have halved that probability that we're still paused. So said another way, there is a 95% probability that we are going to see cuts by May at the latest. And that's according to CME. And of course, there is always scope to see this reprice in March. Now, as it stands, that's off the table. But if you've been here before, if you've been following my work, okay, take a look at this. 1.4% CPI as per the Trueflation data. We are really starting to see an acceleration to the downside at the hard right edge. This is exactly what we were expecting to see. This is exactly what I wanted to see as we swing from a highly inflationary to a deflationary environment. All of this makes sense. Okay, now this is yet to be confirmed by mainstream CPI data, which of course comes out on the 13th of February. So we've got about 2 weeks before we see that CPI reported from the government, the official government rate. And if we can see a 2 or even a low 2 handle for CPI, then believe me, this thing's going to reprice again to the downside. We're going to put cuts back on the table for March. So there's a number of things to take home from here, isn't there? Number one is that so far, this is bullish. This is bullish for risk because, remember, the sooner they cut, the sooner the top historically comes in for the stock market. So if we've pushed cuts back out to May now at least, then happy days, right? We've got an extra 2 months of potential upside for the stock market and for Bitcoin and all of risk assets to complete what I believe will be their blow off top move. We will also potentially get to see a spanner thrown in the works in 2 weeks' time once CPI comes in much lower than most people expect. And that, of course, could take probability that we remain paused at March's meeting significantly lower. And regardless of what happens between now and then, it seems almost certain as you can be in markets, that we are indeed going to see the first rate cut of the rate cutting cycle no later than May of this year. And again, based on historical data, if they were to cut in May, that would tell us that we have a maximum of around 2 months between that first cut at the beginning of May and the top coming in for the stock market and likely Bitcoin. Okay, likely Bitcoin. So as ever, one day at a time. Open to being proven wrong, open to all possible outcomes, no bias, no ego, no dogma. But as it stands, the things we were looking to see was inflation come down, we can tick that off. We were also looking to see that we'd be getting cuts by no later than May, and possibly, remember, to take this probability back down, putting cuts back on the table for March. So it's going to be a very interesting couple of weeks. What would be really nice is if on top of all of this, we can get the soft landing narrative proliferate. It'd be really nice if we could start to see people say, well, inflation's come down. No one really expected to see that 2 handle so quickly. Nobody really expected to see inflation start to drop so fast. Nobody expected that the Fed had actually done their job and controlled the thing, brought inflation down and engineered new all-time highs for the stock market. So perhaps what we can see is every man and his dog start to get really, really bullish and even start to worship the Fed a little bit for solving an unsolvable problem. That would be really nice. That would be really nice, and that would give us the confidence to say that indeed we are going to be putting in that blow off top, followed by the deflationary bust. So far, so good, and we are officially through January. So of note, when the S&P 500 is higher in January, the final 11 months of the year are up 12% on average and higher 86.4% of the time. That is significant, tells us to keep an open mind about finishing the year green, at least based on historical data. Whilst the stock market looks great, okay, whilst we continue to hold support, whilst we continue to set higher highs and higher lows, something odd is indeed happening under the surface of the stock market. The S&P 500 hit record highs last week. At the same time, an indicator of underlying selling pressure spiked to panic levels, which has never actually happened before. So at the hard right edge here, you can see the S&P 500 made new highs, whilst underlying selling pressure spiked to panic levels not seen since here and here. So that's weird, right? That is indeed weird. What are these implications? Possibly that the strength underlying the market is weaker than the price chart would have you believe. We've also got another odd under the hood behavior chart here, because while main indexes continue racing towards record highs, the weekly NYSI stochastic has been dropping near max oversold levels not seen since the October lows, which is also very unusual for record highs. It happened once before though on new highs, and that was February 2020, before of course we had the C19 plunge into March and the big meltdown. So whilst the stock market at the bottom continues to make new highs, we got the NYSI stochastic here plummeting down here. The last time this happened, we saw very, very nasty, swift declines happen for the stock market. So it'll be important to stay on our toes here. It'll be important to pay attention to trendline breakdowns or support losses. It will also be very, very important. Keep an eye out for failed cycles. Failed cycles with this sort of thing going under the hood would be indicative that we are indeed going to start that declining move. Given where we are, given how up only it's been for a while, some kind of correction makes sense. It doesn't necessarily have to be the end of the world. Also keep in mind, I put out that video regarding the 4-year cycle low for the S&P 500, and it's due in the not too distant future. Doesn't mean we can't go up in the meantime. But remember, the higher up we go, the more bullish most people will get. However, the higher up we go for me, the more bearish I become. In other news, we had New York Community Bank fall 40% after earnings. Okay, and this is the bank that acquired the collapsed Signature Bank. So right in time for getting into that March timeframe where the BTFP can end, right? Okay, historically speaking, banks doing stuff like this is very bullish for Bitcoin. Will this time be different? I doubt it, to be completely honest. And here's a fun fact for you. Okay, if Bitcoin breaks the stock to flow model to the upside again in 2024 to 2028 cycle, just like it did in the 2012 to 2016 cycle, then diminishing returns will be dead in the water and exponential returns will be back. Something I've been observing for quite some time is that it seems to be consensus in the market that diminishing returns are a thing and that they're never going to break. It seems to me that it's crowded to think diminishing returns are going to continue. As it stands, they have not yet been disproven. But I do personally believe the path of max pain is to have everyone targeting somewhere between 60 and 80k for the top, in line with the diminishing returns idea. And then Bitcoin, of course, soars to a significantly higher number, likely 3 or 4 times that number that everyone is going to have as their first sell side target. So again, to be determined, but I've been in markets long enough to know when the herd is sure of something, typically they tend to be quite wrong about that. So let's see if we can break this diminishing returns. Let's see if we can catch a bunch of people off by having a huge, huge number. And hopping into the charts, let's see if anything's different, right? The Dixie still kind of sideways. Is this breakdown, retest, possible resumption lower, or have we got some kind of spike to the upside? That's to be determined. The US 10-year yield, okay, this is fantastic. Take a look at this. This makes perfect sense if you think about it, right? We know that cuts are in sight. We know they're not coming any later than May. And of course, if that CPI print is anything in this region, then how on earth is the 10-year yield going to continue to rise? Also, the thing I love about this is I'm seeing so many people tell me I'm stupid for this idea, and that what has to happen next is some huge breakout and move higher. I'm seeing people call for 6, 7, 8% by the end of the year. This is ludicrous. We're about to start cutting rates. What are you talking about? So far, what have we done? A repair, a rejection at resistance, and a rollover. This makes perfect sense. We're probably going to see the low 2s by the middle of this year. And of course, that will be conducive to seeing a melt up and a blow off top moment for the stock market. So far, so good for Bitcoin, right? We were talking about this in yesterday's update. I said that probably what we're going to see is something along this lines. The market will blame the Fed for spooking markets, but of course, the failed cycle would have told us to expect this all along. I do wonder if we just move this up to connect the wick from back here and the wicks from here. Is this our new line in the sand? Is this something we should be following? I'll leave it for here for now because there's nothing to say this isn't breakout or retest looking for that resumption higher. But the price action so far to me is close to confirming that we are indeed going to get one more dip into a cycle low. That would make the most sense to me from a cycle perspective. But if we're going to do that, then we really need to lose 41k decisively on a daily closing basis. That will get us back below this downward sloping red resistance line, and then we can be looking for a low to form inside the timing window to buy a swing out of. But for now, let's see, right? Because there is nothing to say that that isn't the cycle low, and we're not going to do this. Gold still following the yellow squiggle. We'll be looking for shorts a little bit higher up, but now is not the time. Oil looks like it's working on that pullback into that cycle low, which is due, I think it's around the 9th of February as well, isn't it? It's 40 days, the same as the S&P 500 for oil. So we're on 35. Yeah, so 5 more days of pullback takes us to the 9th of February. And then I think we're looking for a left translated daily cycle to roll over and short this thing back down to the low 30s or 40s. I know, again, a lot of people don't like this idea, and maybe I'm flat wrong, right? Maybe we blast out of here, but that's not my base case personally, especially given that the CPI is starting to look like this. The stock market, nice big FOMC candle, right? Nice big FOMC candle. Nice bit of fear to come in. Is this, we must be getting close to a half cycle low in here. What is this? 17. So 17, 21 would be perfect, right? A few days either side. This could well be the cycle low, the half cycle low, excuse me. Or maybe we've got 1 or 2 more days just to do this and then recover. Time will tell, as always. If, of course, we start to lose this upward sloping support line on a daily closing basis, that will be an early warning sign. And particularly if we to close back below the all-time high level, that will also be a warning sign. And of course, if we are taken out of the trade below the cycle low and we print a failed cycle, this would also be a left translated daily cycle. And that would tell us to be open to more downside. But all the while we're holding above support, all the while we haven't breached this low from back here, and the thing is bullish. And so far we continue to make higher highs and higher lows. It's the same deal for the NASDAQ, right? Look, still holding support, okay? Still making higher highs and higher lows. So long as we can bounce at support here and continue to put in higher highs and higher lows, then we will continue to push the trade. Dow Jones got a little bit further to go before we can touch support, but overall the thing is bullish and it's still making higher highs and higher lows. Also seeing the VIX coming off a little bit today, so we'll see. Remember, tomorrow is Friday and they love to short the VIX on a Friday, so that will probably show up tomorrow. And the same deal for the Russell 2K, right back into support. Now if we lose this, especially closing out the week, if we close the week below this upward sloping red support line, early warning shots will have been fired. And this will, of course, not be a good look because we've got the S&P and the main indexes at the top making higher highs and higher lows, whilst the Russell 2K is making lower highs. Now, last time we saw that, it topped the market right before the 2022 bear market. So I don't want to see that. I want to see this support here in red hold for the Russell 2K. I want to see us resume up something like this. And if we can do that, then we can certainly breathe a sigh of relief in the meantime. Crypto-related equities, look, counter-trend bounce, possible rollover, looking for a cycle low. Can we get it? That is to be determined. Same deal here, right? Are we going to start to roll over into that cycle low? And yeah, you know the deal, right? Possibly roll over into that cycle low, redraw this trend line, and go from there. We'll see, right? We will see. So far, despite a lot of bearish sentiment, it's just another day in the FOMC matrix, right? Just another day. Another round of games, another round of volatility. And if you're able to stay calm, zoom out and look at the charts, what have we really had? We've just had logical moves back into support. No technical damage as of yet. Now that can change, that could change today, but it hasn't changed yet. So patience as we look for those miners and crypto positions, particularly for the members. And as ever, we take things one day at a time and be open to all outcomes. So I hope you're doing well in life. Until next time, take care from me. All the best. Cheers. Bye.